Hey everyone, welcome back to Corporate Decoder, where we uncover the secrets hidden in plain sight. And today we've got something juicy involving CompoSecure Incorporated. You know how sometimes deals get announced and everything seems rosy, but then a bunch of shareholders start yapping about missing information. Well, buckle up, because we're diving into a filing that is all about those grumpy shareholders and how the company is trying to smooth things over. So, CompoSecure Incorporated is facing some heat. They announced a big deal back in November to combine with Husky Technologies Limited. It is a massive deal, worth about $3.953 billion in cash, plus a whole lot of CompoSecure's own stock. On top of that, they're also raising another $1.96 billion through a private sale of their stock. Big moves, right? But then, shortly after they filed the paperwork to get shareholder approval, some shareholders started sending letters saying the company wasn't telling them everything they needed to know to make a good decision. And it didn't stop there. 3 lawsuits got filed too. These shareholders are claiming the company's official announcement, called a proxy statement, is missing key details, is misleading, or that some people involved in the deal had conflicts of interest. They're basically saying it is not fair, and some are even asking to block the whole deal or get money back if it goes through. Now, the company is saying all these claims are totally unfounded and they don't need to add any more information. But to avoid any drama that could delay or mess up their big plans, they've decided to add some extra details anyway. Think of it as adding a few extra chapters to a book after some readers complained it was a bit short on certain plot points. They're adding some supplemental information to this proxy statement, and we're going to look at the most important bits. First up, they're adjusting some details about how they valued Husky Technologies Limited. This involves a comparable company analysis, which basically means they looked at similar companies that have been bought or sold before to get an idea of what Husky might be worth. They're showing a table here with different companies and what investors were willing to pay for them compared to their earnings before interest, taxes, depreciation, and amortization, or EBITDA. For example, Nordson Corporation is listed with a 2025 estimated valuation to EBITDA multiple of 16.9 times, Lincoln Electric Holdings. Incorporated is around 16.6 times. Next, they're showing a selected precedent transaction analysis. This looks at specific deals that have happened in the past to figure out what a company like Husky is worth. They've listed about 14 different transactions. One of the most interesting ones is the previous sale of Husky Injection Molding Systems International Limited back in December of 2017 to Platinum Equity. The deal back then was valued at $3.9 billion with an enterprise value to LTM EBITDA. That is earnings before interest, taxes, depreciation, and amortization over the last 12 months of 11.6 times. This gives us a baseline for how Husky was valued in the past. Then we get into the discounted cash flow analysis, or DCF. This is a pretty standard method where they try to predict how much money a company will make in the future, and then figure out what that money is worth today, taking into account the time value of money and risk for Husky. They calculated a range of implied enterprise values between about $4.917 billion and $6.961 billion. They compared this to the current deal's implied value of $4.976 billion. They also did a DCF analysis for CompoSecure Incorporated itself. Using their own financial projections, they arrived at implied equity values per S-Hare. This is where they try to figure out the value of the company if you were to buy all its stock. This next part is about a discounted equity value analysis for CompoSecure Incorporated. They're looking at future valuations by applying what is called a NTM-AV filter multiple, which means the value of the company divided by its earnings before interest, taxes, depreciation, and amortization for the next 12 months. They used a multiple of 15.3 times. They applied this to estimated future earnings and then subtracted net debt. It's interesting to note here that they are projecting negative net debt, which essentially means they expect the company to have more cash than debt in the coming years. For the end of 2026, they estimated negative net debt of around $208 million, growing to negative $551 million by the end of 2028. Then they've done a similar analysis, but for the pro forma combined company. This is what CompoSecure Incorporated and Husky Incorporated will look like together after the deal closes. Here they're using multiples of 15.3 times and 16.3 times. They're also projecting net debt for the combined entity starting at about $1.692 billion in 2026 and dropping to $713 million by 2028. This shows they expect the combined company to generate enough cash to significantly pay down debt. This next part is about potential conflicts of interest, specifically with their financial advisor, Morgan Stanley. It seems Morgan Stanley is not just advising them on this deal, but they are also lenders to Platinum Equity Incorporated and its affiliates, the folks buying Husky. They've even earned between $10 million and $20 million in fees from Platinum Equity over the past 2 years for financing services. This is important because it could create a situation where Morgan Stanley's advice to CompoSecure Incorporated might be influenced by their existing relationship with Platinum Equity Incorporated. So what is the story here? CompoSecure Incorporated is trying to pull off a major acquisition and fundraising, but they're facing a shareholder revolt. The company is adding more disclosures to try and appease these shareholders and avoid legal headaches that could derail the deal. The financial analysis provided suggests that, on paper, the deal might make sense with analysts projecting positive cash flows and manageable debt for the combined entity. However, the fact that they are having to supplement their disclosures so late in the game, and the number of lawsuits filed, do raise some questions about the initial transparency. We've seen companies try to rush through deals and face repercussions. In my opinion, CompoSecure Incorporated is taking a calculated risk by trying to push this deal forward despite the shareholder pushback. The financial projections seem reasonable, and the pro forma combined company analysis suggests that the merger could lead to a stronger, less indebted entity. However, the legal challenges and the potential conflicts of interest with their financial advisor are significant risks. It's like building a beautiful house on a foundation that might have a few cracks. They're clearly focused on closing this transaction quickly, but they need to be absolutely sure they are not overlooking any real issues that could come back to bite them or their shareholders later. It will be interesting to see if these additional disclosures are enough to satisfy the disgruntled shareholders and avoid further legal battles. This is definitely one to keep an eye on. Alright, that is our breakdown of CompoSecure Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the deal is a good move, or are the shareholder concerns valid? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out. And subscribe for more deep dives into the corporate world. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching. See you next time.